Okay, welcome back. So we got the market, which is up about 15 points. Z was a mover. We highlighted that. There's order for NBCC. The stock is up about 0.5%. Interglobe continues to make fresh. Look at that. I mean, Z, 5.5%. That's Interglobe. Let's go back to Z because, I mean, it was up 3%. We were just discussing this with Mangalam, and it's making another move higher. I mean, another 10 rupees or so from when we last spoke of it, which was 5 minutes ago. So is there some new information? One doesn't know. I mean, I'm just wondering aloud, are there names already of potential suitors floating around in the market? One doesn't know. I mean, the press release yesterday just talked about, a banker being appointed to look for suitors. So, 462 and the stock is spiking as we speak. Just a reminder, once again, in 40 minutes, you'll hear from the management. I mean, the analysts at least will hear from the management. Let's talk about the big story. That is oil prices, the big drop. What are the big factors and where is oil headed from here? We'll have that for you. Manisha is joining in to take us through that conversation. Manisha, morning.
Morning, Prashant. And a stunning reversal is what we've seen in the crude oil prices from a 4-year highs in the first week of October to 1-year lows in the first week of November is how we've come in case of the crude oil prices. Well, this is the longest losing streak in 3 decades for the US crude oil prices. And if you look at the factors, really, we have seen almost everything turn bearish. You have higher output coming in from US, Russia, OPEC. The demand is faltering in the global markets. The equities sell off, the strength in US dollar. And the final nail, of course, has been the weak China data today in the morning. That tells you that with the weak demand and excess supplies, there is perhaps more pressure that you could see into the prices. So 0.5% down on Brent and NYMEX both. If you look at the Canada crude oil prices, those are trading at $15 today in the morning. So of course it does trade at a very huge discount, and that just seems to be deepening right now. Add to that, there is a speculators fueling the oil demand breaking losing streak as well. We have seen the net longs now cut to 1-year lows, and there are fresh short positions emerging as well in the crude oil prices. So every way that you look at the crude charts, the very near term or intermediate term, it does not look good on the charts in sense of those prices there. But Miswin Mahesh now joins us to tell us on what he thinks about these current prices. Miswin, hi. We have seen the fundamentals really, and it does point towards bearishness. But is it all in prices now? Would you hope for some consolidation at these levels, or are you expecting further decline?
Hi, Manisha. I think we are still up for a bit more weakness in oil because the market's clearly signaling 2 things. One, it doesn't believe OPEC can fix this because, I mean, obviously over the past few days, we've seen both the Saudi comments as well as the group as a whole commenting that they will do something on the 6th of December. So that's one. The market has lost its
trust in OPEC.
Trust in OPEC. The second thing I'd say is the market's also sort of really extrapolating quite a bit here in terms of what Trump's going to do next. There's quite a bit of, it unsettled the market that, Trump did a bit of a reversal in terms of those waivers, and I think the market's now extrapolating that those waivers will continue to be extended, which I think is wrong.
But Miswin,
the second,
I get your point on that. But a 7% decline in a matter of few hours, what would you give that to? Would you say that the speculators have been offloading their long positions in a hurry right now, and are they done?
No, I mean, this is more to do with things such as delta hedging, etc. So very, very briefly explaining what this is, a lot of oil producers have bought, especially in the U.S., have bought $60, $65 put options. If you're a bank that has sold these put options, they need to cover, basically, as the price gets closer to these put options, and they need to start selling oil. It's called delta hedging, to make sure that they're not going to be the ones responsible for paying out those options, right? So yesterday's move was largely to do with that. There's tons and tons of oil being sold purely to cover these options. And as you can imagine, all of that happening in a very brief window of time just accelerates any move. That's not over yet. This gamma effect on oil will continue, and that's amplifying the move. I'd say fundamentally, prices should, average around $65 a barrel, but we'll get the undershoot, and I wouldn't say, the bottom's there yet.
So from these levels, are you looking at yet another $2-3 of a decline, or do you think there is some more deeper, sharper cut coming in even from these levels?
I think from these levels, going into the OPEC meeting, one thing is certain. If you're if you're holding a short on oil, you would feel highly nervous. So I wouldn't think the short positions would continue to build. It's more of this gamma effect that I just mentioned that will continue to amplify. So 60, I wouldn't rule out 60 being touched before the OPEC meeting. But again, this is more of an undershooting linked with the factors that I mentioned earlier. We are in a weak market because what I believe Trump has done has just built a bridge up until May 2019. May 2019 is when U.S. supplies come into the market. We would have had a short oil price spike up until then because, the Iran volumes would have gone, Saudi doesn't have spare capacity, etc. That narrative has essentially been closed with this, what I call the Trump bridge. He said, let me waive these sanctions off until May. After May, the U.S. can actually go very hard on Iran because U.S. supplies are coming to sort of backfill or replace it in any case. So that's how I read the market at the moment. Whether OPEC cuts or doesn't in December is, I still say, a 70-30. It's not a done deal yet. Sure. I think Iraq, Nigeria, Libya still need a lot of convincing, and the Saudis may not want to do all of it, all of the heavy lifting still on their own. So I wouldn't still rule out, the fact that, the OPEC thing is still a done deal. But this is how I read the market at the moment.
Makes a lot of sense, Ms. Min. Thank you so much for joining us. So that perhaps really explains that 7% of a cut in a couple of hours, a lot of delta hedging and people actually covering their longs is what has led to a lot of decline in the markets.
Okay, well, thanks, Manisha. We're definitely not complaining. So that is on crude prices. We need to take a break now with the news that the Nifty is up 13 points, the mid-cap index still up around 0.4%, Bank Nifty up 0.7. Take a break, but up next, Vaibhav Sanghvi, co-CEO for Vendus Capital Alternate Strategies, will be joining in. We'll get you trading strategies, as always, with Ashwini Gujral as well.